The Union Budget presented yesterday lays out the government's roadmap for the year ahead, with a focus on sustaining growth, managing fiscal balances, strengthening exports, funding India's ambitions, and enhancing India's global competitiveness. But as always, the real story lies beyond the announcements, in how these proposals translate into action, impact businesses, influence markets, and shape India's economic journey. That's exactly what we aim to do this evening, move beyond the fine print, cut through the noise, and decode what Budget 2026 truly means for India's economy, markets, businesses, and citizens. Before we begin, a sincere thanks to our presenting partner, IDFC First Bank, our associate partners, Dhruva Advisors, Aspiro, and Funds India, and our hospitality partner, the Leela Palace, New Delhi, for supporting this important and timely conversation. Without further ado, let's have a look at the key budget highlights. Can we have the AV, please?
Navigating global headwinds, India's Reform Express is surging ahead with bold infrastructure and manufacturing bets. In her 9th consecutive budget speech, Finance Minister Nirmala Sitharaman targeted fiscal deficit at 4.3%, while ramping capital expenditure to 12.2 lakh crore rupees.
Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. The Reform Express is well on its way and will maintain its momentum to help us fulfill our kartavya.
From Mumbai, Pune to Hyderabad, Bengaluru, the FM signaled a connectivity revolution through 7 rail corridors. She also announced rare earth corridors and chemical parks to boost India's strategic minerals and chemical self-reliance. Anchoring the strategy are 6 priority engines: scaling manufacturing, rejuvenating legacy industrial sectors, creating champion MSMEs with fresh incentives, a massive infrastructure push, long-term energy security and stability, and city economic regions. Sectoral measures targeted higher farmer incomes via high-value crops, 5 regional medical hubs with 1.5 lakh caregivers trained to boost medical tourism, and custom duty cuts on 17 medicines. The budget also included announcements to bolster India's IT services sector, offering incentives and policy support aimed at attracting fresh global investment.
I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India.
The Union Budget charts a bold path for Viksit Bharat, unlocking Yuva Shakti and strategic self-reliance to drive investment, exports and inclusive growth.
भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है।
Well, that were the highlights of the Budget 2026, and we will get to that discussion very soon. But to formally open this evening and share his perspective on the budget and the broader economic landscape, it gives me great pleasure to invite Mr. V. Vaidyanathan, Managing Director and CEO, IDFC Bank, for the opening note.
Okay, good evening, ladies and gentlemen, good evening, friends. First of all, wonderful event put together by all of you, and this video said it all. I think it's a brilliant video, put it all together. So I'll keep it very quick for the interest of time. The key thing which is really stands out about India and about the budget is for 11 straight years, a continued focus on infrastructure is really a big deal. And, this year, like 12.2 lakh crores, 2.9 lakh crores on roads and infrastructure, following on 2.5 lakh crores last year, 2.9 lakh crores on railways, 7 high-speed rail freight corridors, investment in ports, airports, infrastructure. This is quite sensational. I was doing a back-of-envelope calculation before coming here that, frankly, for this 11 lakh crores, you could have chosen to give, say, 2,000 rupees to every adult woman in India for 12 months at a stretch, and then you could have spent off 11 lakh crores, and then you could have made maybe 500 million people happy temporarily. But frankly, that wouldn't have bring down the cost of goods. That won't make India more competitive. And in this architecture of putting roads, highway, you bring down cost of goods. Bring down cost of goods, products become competitive, inflation comes down, coupled with GST, you actually make, and process reforms make things faster, less fuel consumption on the roads, more green, and make products more competitive we can export to the world. And that makes India fundamentally more competitive, a larger economy, more tax collection, and finally improve a lot of the people in a more sustainable way than freebies. And to stay away from freebies for 11 years in a row, I think is really, really something. And of course, there are many other things about services, infrastructure, tourism, health, SMEs, and many other things, and data center and all that stuff. In fact, I really believe that the consistency is the key, and for staying on the path of reform, infrastructure, and making India fundamentally more competitive is the core of the budget making for the last 7 years, for which we must really thank the government, the policymakers, many of whom are with us today, the finance minister, the prime minister, and putting this marker of Viksit Bharat for 2047 actually energizes and makes people to work towards a goal in a way which is consistent and in a way that is more sure than making people temporarily happy and then losing the plot. So thanks very much, and today we really look forward to hearing many of the secretaries, and we really want to hear your insights. I must read out to you 3 or 4, 5 or 6 headlines I read from the newspapers this morning that says it all, and I think it says one here says stability trumps spectacle. It does. The next one says FM Sitaraman takes a shot at the future. The third one says keep calm and carry on. The fourth one says a long game budget, and this is the best one of all. It says, Mr. Modi in this avatar of probably Tom Cruise, I think, because it says Mission 2047, and if you've seen Mission Impossible, you know that this is not impossible. This will probably happen with a kind of consistent approach. So thank you very much, ladies and gentlemen. It's our pleasure at IDFC First Bank to be part of this, and once again, thanks.
Thank you so much, Mr. Vaidyanathan, for that insightful opening to the important dialogue. Moving on to our first session for today, and we begin with exports, a key engine in India's growth, especially at a time when global trade is being reshaped by geopolitical shifts, supply chain realignments, and slowing demand in key markets. Budget 2026 has reiterated the government's intent to strengthen India's export competitiveness and deepen integration with global value chains. And to share how the government plans to accelerate India's export story, I am pleased to invite Rajesh Agarwal, Secretary, Ministry of Commerce and Industry. Ladies and gentlemen, a huge round of applause for him. And I would also like to invite and welcome on stage Parikshit Luthra and Shireen Bhan to drive the conversation.
Well, good evening, ladies and gentlemen. It's wonderful to be back here on the CNBC TV18 Budget Verdict platform. And many thanks to the Commerce Secretary, Mr. Rajesh Agarwal, for a very fitting start to Budget Verdict 2026. So if I can start by asking you, the context that the Finance Minister laid out the budget, she did highlight the fact that India is faced with a very difficult geopolitical climate. We're also faced with geo-economic confrontation, geo-economic fragmentation, which makes the mix even even more complex. And within that context, the government has decided to focus on enhancing competitiveness and thereby enhancing India's export competitiveness specifically. I want to understand from you the groundwork that the budget has laid out for 2026 and beyond. What now is the immediate export aspiration that can be achievable?
Thank you, Shireen. I hope I am audible clearly.
Loud and clear, sir.
Very well, sir.
To President Trump as well.
Yeah, thank you. So, Shireen, you see, for trade, I know it is this is a year of global turmoil, 2025, but still if you see India has been one economy which has withstood and showed resilience. Our economic growth has been in the vicinity of 7%, and the projections are also that will be around 7% or so. Our exports have held good. Our exports have rather grown in this financial year for the first 9 months, and we are hopeful that we'll grow in the last quarter also and keep the trajectory northwards. And as Department of Commerce, as government, we have been creating a much wider ground, a much more fertile ground to see that we can take our export trajectory more northwards, can make a sustained growth in our exports as years come by. And in that quest, if you look at in last 1 year, we have concluded 4 free trade agreements with 30 countries, which might together, earlier we had 14 trade agreements with 26 countries. Now we have 4 trade agreements with 30 countries. And once these are operationalized, we are talking of 56 economies with which we'll have preferential market access, which constitutes around 55 to 60% of the global trade. So that's the kind of canvas we are opening for our industry to actually take advantage of and grow our export market and see that our exports are diversified and they can keep on growing. The budget completely goes on to provide the right structural and the systemic stability to it. If you look at budget, touches the right areas which can actually drive exports in the long run. It touches on manufacturing.
Yeah.
A good competitive manufacturing is a sine qua non for growing exports. It touches services in a big way. India is a services giant, and it keeps a target of 10% services by 2047. So if that is where we are going to move on, and India has been driving, we are 4.4% of the services export globally, that will keep on growing further. So that also will add to, and all these 56 countries that I talked to you about, they constitute 5 trillion of services market out of the total global basket of 8 trillion. So we are 60% of the globe we are covering, where there is more policy predictability, more clarity, so that our services can grow much faster. If you look at all the custom thing also, if you look at trust-based framework that it has been talked of, all the EODB that has been talked of, it will go on to make our products more competitive. And if our products become more competitive, I think it's much better for our exporters, and it's much easier with these FTAs and market opening up. I think our exports are well poised to grow. This year we are looking as to cross $850 billion, but going forward, once these FTAs are operationalized, I hope we'll catch on faster.
What is that number that you're working with? As soon as these FTAs are operationalized, UK hopefully will be done within this calendar year, and the EU mega trade deal should be operationalized in early 27 is what we're given to understand. If both these go through, I'm not even coming to the US yet, if both these go through, what could that export number look like, for instance, in FY27, FY28?
See, putting a definite number is a very difficult task, but I can tell you at the rate at which we will be growing, definitely there will be much sharper and much increase in the growth rate that you will see once these FTAs are operationalized, because we are talking for much bigger market. EU itself is a 10 trillion market, goods and services combined, and if that opens up, this is around 30% of the global trade. I think it can actually grow much faster.
Right.
So numbers I'll not hazard a guess and keep on giving fodder to the media on that, but I feel it will grow very well.
Mr. Agarwal, when it comes to labor-intensive exports, we've been seeing in the April to November period exports of shrimp, fisheries, leather, footwear, textile, apparel coming under some amount of strain. And you've tried to help these sectors by reducing costs of raw materials that are being imported. Would you be able to quantify for us the kind of drop in exports for these sectors that may be on the anvil, and how you've tried to protect these sectors from the losses that they're incurring?
Thank you, Parikshit. I think labor-intensive sectors have been under challenge because of the global turmoil and the high tariffs that we face in one of our biggest market. But what I can tell you, in spite of that, I think the industry has shown enough resilience. The textile exports till December, overall at a global level, I think it has only grown, it has not gone down. Marine, we are growing in double digits in spite of these challenges because we are diversifying. We are growing in Europe, we are growing in Vietnam. On leather also, we are holding good as of now. So in sum total, in spite of this, all the challenges that we face, I think Indian industry, because of its own resilience, because of its adaptability, they have been able to hold good. And with these now new FTAs coming into being, as Serene pointed out, if UK gets operationalized early, I think this will open up new windows where they can diversify more, deepen their exports in those markets, and maybe make good their losses that they are facing in other geographies.
Right. Just to also ask you about the theme of resilience. You've tried to bring in a lot of resilience with the budget, making sure that there is ease of doing business as well. When it comes to the trade deal with European Union, for that matter, how do you think this deal, along with EFTA, along with UK, is going to open up opportunities for services exports? Yesterday's budget was a lot about services. And how do you think the budget push, along with the FTA push, will help the services sector?
First thing, if you look at the EU, 27 economies, UK, and the 4 economies of EFTA, all these 32 economies are a service-driven economy. UK has 70% of the GDP of UK come from services. So they're all services-driven economy. If you look at all these 3 free trade agreements, you will see the policy commitments under services in all these three agreements are very high. In EU, we get one of the best ever commitments in 144 subsectors, which means a long-term policy predictability for all our service exporter in 144 sectors. In UK also, we get something around that. In EFTA also, we have got one of their best offers. So what we see in all these economies, which are large service consumers, we are seeing a long-term policy predictability. We have got commitments around mobility also in all these agreements. That will also help our service providers to move in the right direction. And now with the impetus that we get in the budget, like the impetus for the GCC, the safe harbor rates, thresholds going up, aligning it with the best practices across the world. What will happen, the GCC ecosystem, which was as it is growing very fast in India, now a lot of GCCs from even European and these companies from this region will also find it easier to open GCCs in India because they have got more policy predictability in India, and we have got mode 1 commitments in all these agreements. So they can sit here and export services there. So the FTA actually aligned with the policy shift or the support that we are getting under the budget.
You know, your predecessor, BVR Subramaniam, called it the services budget here on CNBC TV 18, Mr. Agarwal. I know there's many people, including Mr. Kanabar, waiting to ask you a question, but let me ask you, sir, you laid out for us what's the latest as far as the UK FTA is concerned, the EU FTA is concerned. Let me ask you the big question that everybody in this room and in the country wants to know. What is the latest on the US trade deals? The last conversation that you and I had, you said that there were 2 frameworks that were being looked at. One was the trade deal in itself, and the other was a framework to address the reciprocal tariffs. India's been hit with 50% tariffs. The other framework, in your words, was to deal with the reciprocal tariffs. What's the progress on both those 2 frameworks?
As I told you last time, Shireen, I think we remain engaged, very positively engaged, and it's progressing very well. The 2 frameworks are still in place. The larger framework is going to take time because US is a big economy, and a larger, deep, wider FTA will always going to take time. But the one which can be done in the short run is the one which is an early harvest, can address the reciprocal tariff bit, is also getting shape. When it will happen, how fast it will happen, these are the questions. I think I'll not put a date to it, but we are hopeful that we should get it sooner than later. let's see what happens next.
Sir, I'm just going to push you a little bit on this. When you say we're waiting for it to take shape, or it is shape in progress and work in progress, can you explain to us what are the cornerstones, what are the pillars that both sides are working on, at least as far as this reciprocal tariff framework is concerned?
Largely, see, reciprocal tariffs are in the goods space. If you look at these tariffs are in the goods space, so one of the key discussions in this is how we are able to align our tariffs on both sides to see that we work towards a more balanced trade between the two nations. So that is going to be the core of whatever we achieve in the first. Aligned with that, when you, as you mentioned, tariff itself is not the driver of trade. The entire ecosystem, the policy certainty or the non-tariff issues also needs to be addressed. I think we are trying to discuss on both sides to see that when the deal gets finalized, both sides are better off than where they are standing
How much
today.
convergence is there today, Mr. Agarwal, on the framework to deal with the reciprocal tariffs? Would you say we're 90% done, we're 80% done, we're 50% done? How much convergence is there on both sides?
I think you heard my minister a few days back where he said most of the sticky issues are now out of the... So that's where I will leave it, that most of the sticky issues are more or less resolved. So we are progressing fast. Let's see what happens next.
One quick question before I hand it back to Parikshit, and then I'll get the audience to come in as well, is a comment that's come in from President Trump. On board Air Force One, President Trump said that a concept of a deal has been arrived at with India to buy Venezuelan crude. Now, for context and for the benefit of our viewers, India was a buyer of Venezuelan crude till the US actually sanctioned Venezuelan crude. So I want to understand from you, sir, what is the concept of a deal that President Trump claims that we have arrived at on Venezuelan crude?
See, one, I'll not like to comment on Honorable President Trump's comments because that will not be fair on my part. Two, from India's perspective, we are an energy importer. We import a lot of energy, and our position always have been that we want to have a very resilient, diversified supply chain for energy products. So we'll always want to diversify, we look for more opportunities, and in that quest, what happens is something for the energy department to decide.
You know, Mr. Agarwal, the other question I think a lot of exporters would want to know, you've sealed a number of FTAs. Some of them will take effect this year, will be ratified this year. How many more deals is the government of India likely to seal or sign this year? You're in negotiations with Israel, with Canada, with Mercosur. What's the status?
Yeah, we are in midst of multiple other negotiations also, but with EU closed, and I think one of the major part of the globe, 27 economies gets closed. So we are now 56 countries which will be having preferential market access. In addition, we are looking at markets we provide which are complementary in nature, like Israel, where goods and services basket is more complementary in nature. We are also looking at GCC. We are also looking at Chile. We are also trying to look at EAU also. There's also a negotiations going in progress with them. So we are hopeful some of these deals will definitely find finalization this year. We are also looking at, now you have heard something that the Canada also wants to have resume the negotiations and restart negotiations in that direction. We are considering that also, or are engaged with our counterparts on the other side. So we hope with this 6-7 new negotiations going on, some of them will cross the finish line this year. I'll not again put a number of which one, because I'll not put one against another, but we are positively engaged on all these negotiations, and wherever we can find fast convergence, a win-win solutions and a mutually beneficial deal coming into shape, we'll try to finalize it and move ahead.
You know, one question that I'd like to ask you is about the sentiment. We'll not go into the nitty-gritties of the trade deal with the US again, sir, but what is the impact that it has had on market sentiment? We've seen net FDI coming down, slowing down. There has been a flight of FIIs as well. What can be done, and what would be your priority in terms of having a durable, sustained pipeline of FDI in the country? Would there be certain priority areas which you would be looking to liberalize this year, or maybe push harder?
One, I think on FDI, if you look at in multiple other sectors, we have liberalized FDI. Insurance also, it has gone up to 100%. Secondly, in our FTAs also that we are signing, like the one we are finalized with EU also, if you look at, there are multiple services sector where we have taken investment commitments, we have given policy certainty on investments so that they can come and invest in mode 3.
Yeah.
And that's how the GCCs will shape up.
Right.
So I think we are doing a bit as part of FTA also, wherever we can take commitments to give a policy certainty. On a MFN basis also, India, I think majority of sectors on automatic rate today, and it's a very consistent policy that we are seeing over years. There hardly been any backtracking of limits that we have seen in India. So I think there is a signaling to the world that India is providing a policy certainty in the long run. So there is already a signal open. Many of these things globally are happening at the same point in time. I will not like to make one as the causative factors for the other. They might be all happening in the same time zone or time arena, but they may not be connected also at point in time. Without getting into those details, I will not like to comment and get into, because I don't know where actually one is affecting the other.
Fair point. Dinesh Kanabar, sir, go ahead with your question.
First of all, sir, compliments on the FTA, and of course we are waiting for the elephant in the room to sort of be addressed. I think a couple of very important things which I saw in the budget which are very, very positive. One is the tax holiday on data center, and the reason I mention this is that over the last few years, the government has walked away from tax holidays. And I think it's important for the government to realize that the sectors where we see a lot of investment coming in, we need to promote and give holidays. So the tax holiday on data center does give a degree of certainty, which is very welcome. I think the even more welcome thing, which I don't think has been spoken about a lot, is the safe harbor on services, which will promote a huge amount of global capability centers coming to India. One suggestion there is that there has been an overall cap on who can avail, so your turnover needs to be less than 2,000 crores. I don't think that is necessary really. Just opening that up will be very, very positive. You mentioned that we are looking at manufacture in India, we're looking at that creating a base for export. And I was a little bit disappointed, if I may say so, that there was nothing much for R&D and manufacture in India. I think those are the two areas which we need to look at, because we are looking at H-1B visas, whatever is happening out there, probably an inward flight of the talent coming to India. If you are able to provide that platform for R&D, promote semiconductor, etc., that's one thing. And the last comment, Parikshit asked you about a question on FTA. Where are we on press note 3 and how do we address that? Thank you.
Mr. Kanabar, you've taken all my questions. Go ahead, Mr. Agarwal, you can start by answering.
Thank you. One on the GCCs and the safe harbor rate, I think it's a very strong forward movement from 300 crores to 2,000 crores, and the safe harbor rate which are more aligned to international norms. And if you look at the fine print, I think the budget also provides us for a fast tracking mechanism beyond 2,000 crores. So there is a provision wherein there will be a fast track mechanism where the tax authorities and the GCC can finalize. So I think that will provide a lot of comfort to the GCCs to grow. Data centers, as you rightly said, I think it's a very forward-looking policy. The tax certainty bit will enable a complete data center ecosystem in this India to get fast-tracked, and a lot of exports through that data services will also take place from India, adding to my export kitty. So that is also a plus from our perspective in a big way. The third question, the third aspect that you talked about, R&D, I think some of these new agreements that we are doing, there's an technology and R&D collaboration also we are talking of. R&D is something that you can't have any binding commitments from the country, but this is somewhere we are talking of tech cooperation, R&D cooperation with the country. We talked of agri-tech cooperation when we did New Zealand. We talk of technological and high-tech cooperation when we did EU. So we are looking at the right synergies and trying to bring that in forward also. In budget also, I think when we talk of university campuses which can provide education services, I think R&D gets built into it. When we talk of GCCs, GCCs are also now providing R&D services online. So I think there is a lot of R&D which is coming horizontally in many of these things that we are doing, and it will definitely add to the press note 3. I think it is handled by my colleague. It is something which has been discussion in media a lot, as like you, I've also been reading in media a lot. So I hope, let's see what is the decision.
But Mr. Agarwal, what should we realistically now expect in terms of re-engagement with China? Many steps have already been taken, a resumption of visas, travel and so on and so forth. In terms of trade, in terms of economic re-engagement with China, what should we now realistically expect? Chinese companies being allowed back into tendering processes and so on and so forth. Again, a lot of speculation around that. What is the government's thinking? Whether or not a decision has been taken is a separate matter. What's the government's thinking?
I think it's Chinese company, as it is with PN3 also, they don't come under automatic route, but through a screening committee they can come, the investments can come, and that must have been happening in some cases and there. I think with these positive movements in the bilateral relationships, some of these issues are being discussed in media. I'm sure in the government also deep consultations are going on. If the movements, because these positive movements with our neighbor, once these are getting, they have to be quid pro quo, it has to be from both sides. I think our people in MEA and DPIT must be collaborating to see what are the next steps that we can do on PN3 also. So let's wait for any final decision, final call by the government.
Fair enough.
Till then I think we can all keep discussing and keep on building the right pressure or expectation in the ecosystem. Thank you.
When it comes to reducing dependencies, and that's connected with the China question, the budget went a long way in terms of reducing our dependencies on rare earth, on critical capital goods, critical components as well, and their raw materials. Would you say that this is a theme that India is going to double down on, focus on more aggressively, map out our dependencies, look at areas where we're dependent on China or other nations for that matter, and invest more in localization?
I think...
and could you list out 4 top priority sectors for us?
I think COVID itself, when we had COVID across, I think COVID has brought in this new debate of resilient supply chains, plugging the vulnerabilities and trying to see that our sourcings are more diversified. All countries across the world are now talking about it and they are trying to do their bit to do it. But this is something which is easier said than done. It takes time. I think in India, we have come up with very concrete steps. The budget provides for concrete steps while talking of critical minerals corridors and things like that to see that we are able, because critical minerals are an important element in our decarbonization effort also. So if you want to move on a trajectory of decarbonization, we need to work on it. So I think the budget touches the right pain points to see that we are able to work in that direction. And this is something I think each country is trying to do. When US does the mineral partnership or Pax Silica, I think this is also moving in the direction trying to see that how we can reduce vulnerability in the critical mineral supply chain.
Right.
So that I think has been the theme around the globe. Everybody is talking about it. And for India, which has got 1.4 billion population, one of the fastest growing major economy with a very clear aspiration to go to Viksit Bharat 2047, it becomes more so important that we are able to plug our vulnerabilities sooner than later.
We've got a lot of questions, sir. Go ahead.
Mr. Secretary, the government has done a very good job on FDI, not just now, but over the years, this government. And that gives me the encouragement to ask you a slightly provocative question. What in your view are the red lines for this government in terms of opening up FDI? What sectors fall within those red lines? And do you think India has evolved enough that we look at some sort of relaxation on foreign direct investment in multi-brand retail? In some formats perhaps, do you think we as a society and as an economy now have the resilience to be able to absorb this? You've opened up insurance, you've opened up virtually every sector in the economy. But modern retail, multi-brand retail still remains close to foreign investment for the most part. How do you look at that?
I can tell you, Mr. Agarwal, that he and I have had this conversation and this debate for a large part of the last 15 years. So multi-brand retail, we've opened up defense, insurance, pretty much everything. Is that still off the cards?
See, I am not a subject owner on this, so I'll not be able to give a clear government perspective on this because I am not handling that subject. So I'll not be able to say so. But my sense is, as an economy, we are maturing fast. And if you look at multiple sectors that we are deepening our FDI limits and opening up, that goes on to say that story. Multi-brand retail, the sensitivity is not on the multi-brand retail per se, because our economy is poised and is structured in a particular way. The structure of our economy is quite different than the structure of many other economies.
Yeah.
So we have to look at, it's not only about the economic growth, because many countries at the same economic growth level can have a different prescriptions or different, because of the structure of our economy. And we are a very huge economy, huge population, and huge amount of population dependent on different kind of vocations and different kind of.
Yeah.
So we need to look at, if we take these decisions, what is the different pathway in which our economies will grow. And that's why I think this is best, the subject owner will go, but these decisions are something that I think when government feels this is matured enough, it will be taken.
Okay, it will be taken. We've got the budget architects walking into the budget verdict. The DPAM Secretary Arunish Chawla, welcome sir. Thanks very much for joining us. We will come to you in just a second. But let me also bring in Ajay Roti and Anita Rastogi of PwC. Can you raise your hand so that I can come across to you there? You go, Anita, I can see you there. Go ahead.
Thank you so much. So, sir, I think this budget has been really good as far as the requirement of the current need of the country is concerned. But regarding cross-border transactions, we just wanted some more, in-depth analysis by the government to ensure that the businesses don't really get into small little litigations, considering the transfer pricing and customs are two very different areas and they have two different objectives. So is there, and also the economic survey has recommended that, there should be a convergence over there and there should be coordination. So is there any thought in the mind of the government in this area as well? Thank you.
Thank you, Anita.
I think we have been moving positively in that direction, and even the GCC thing that we are talking of again is trying to address that issue precisely. So it is being moved in that direction slowly, but these things take time. It doesn't happen, these reforms don't happen in a day.
Okay, we have questions here. Go ahead.
Sir, good evening. This is Ajay Roti. Again, this is linked to the, what Mr. Kanabar called as the elephant in the room, and where Shirin pushed you on the dates for US trade deal. Given how it's been going with other countries, sir, will we be actually seeing a full-fledged FTA equivalent, or is it a framework? Will we actually have a deal, or is it more of, because even what we've seen is that the so-called deals are also don't last too long. So what is it that we can expect in the short term? Is there an overall agreement on, like you mentioned, only reversal of the reciprocal tariff and thereafter working towards a longer deal? Will we have a full-fledged FTA like the EU, UK, etc., or are we looking at just an agreement in principle on certain things in the immediate future?
As I told earlier also, there are two parts of the deal that we are looking at. One is the larger part, but this will depend on the appetite on the both sides, because it takes two to tango. The appetite has to be on both sides. So then only it will happen, because in any deal the commitments are going to be from the both the side, both the partner countries. As far as the reciprocal tariff bit is concerned, if you have looked at the number of deals that has been announced, I think only one or two deals, the details and the deal has been finalized per se. Majority of deals have been announced, but they have not been completely rolled out yet. So we don't know what is the legal framework in which each one of these deals will be falling. So for us also, that is one of the points that we are trying to figure out when we are doing that. Because there is a wide array of choices that both partners have while fixing the interim deal, while it will address reciprocal tariffs and tariffs on both sides, but the legal frameworks can vary depending on what kind of commitments and how both sides want to give to each other.
Mr. Agarwal, you said it takes two to tango, sir. So are we on the same dance floor even, or we're not even on the same dance floor today, sir?
Therein I'll only say, you have been hearing Honorable President Trump. He says that we are very near and is going to do one.
We are very near and we're going to do this. Sandeep Jhunjhunwala of Nangya Global, if we could stand up so that I can see where you are and get a microphone across to you. Go ahead.
Hi, sir. Good evening. Regarding the FTA, while we know that the US is in the pipeline and EU is something which is already sealed, and you spoke about some of the other larger FTAs being in the pipeline, just wanted to understand if you could give us a little more visibility on what are those other significant ones, and what does the Indian economy and the Indian consumers stand to gain on account of those FTAs as and when they come.
I think answered that already. Parikshit, over to you.
Yeah. So, Shireen, I had a question for Mr. Agarwal, and this is based on the budget, sir. And this is an item that you had been working on how to make it easier for manufacturers within special economic zones to sell within the domestic tariff area. And the budget has announced that they will be given concessional duties. Could you give us a sense on when this scheme will be implemented? What will be the concessional duty that will be offered? What are the sectors that are likely to benefit?
I'll touch on two aspects. One, why. SEZs is an old scheme that has been going on, but what has happened over the years, the landscape of trade has changed. Over the last 15-20 years, we have done multiple FTAs. So many other countries and many other SEZs across the world now have duty-free access to our market in many other sectors. So SEZ may be functioning in Vietnam, may have a duty-free access in some sectors in India. Our SEZs don't have that. So we are trying to look at how we are able to provide that access to them also. But at the same time, we need to see that the interest of the domestic industry also doesn't. So we are trying to find a fine balance between protecting the interest of domestic industry, but at the same time trying to give them a pathway. And that's why this announcement. Two, now that this announcement will definitely spur a lot of confidence in our SEZ units, because the ideal capacity that has been lying there can be used very well to substitute some of our import supply chains in the domestic market. Two, when they get scale, they become more competitive. The production becomes more competitive, and competitive production means more exports. So I think it will also enable our more exports also, more value add in the SEZs, and also lead it here. Three, when do we do it? I think it has been announced in the budget. We will try to do as fast as possible, because both commerce and revenue will need to sit together and try to figure out what are going to be the duty rates and how we are able to roll it out. I think it shouldn't take much time, but I think as early as possible in the next financial year, we should roll it out.
Right.
In the next financial year, sorry Parikshit, just one quick clarification there, sir, because the finance minister said that this is going to be a one-time window. So how long for which this period of relief is going to be provided for? This window is going to be open for how long, sir?
I think my sense is that window, because I think this is something we are looking at for the existing units in the SEZ, and that's why probably it's a one-time measure that has been announced, because the current units which are there are facing this challenge. They have ideal capacity, and this is not being leveraged for substitute the imported supply chains in the domestic market. So we are trying to provide that facility to them. The details around this scheme, I think both ministries will sit together and finalize, and that's why the broad intent of the government has been conveyed as a part of the budget statement, but details will be worked out between the two ministries, and we'll roll it out to the satisfaction of our SEZs. Thank you.
So a lot of exporters have been coming to you with pain points over the last few months. Are there more targeted schemes for certain sectors, maybe like the leather sector, which are on the anvil, which you're thinking of in order to support the labor-intensive exports? And also on the timeline for implementation of the export promotion mission, if you can give us a sense.
One, I think on the schemes for sectors, I think largely these are the different stakeholder ministries which come up with various supporting scheme for the sector. Like for textile, a lot of Samarth 2.0 has been announced, other initiatives have been announced for textile in the budget itself. So they will all be rolled out by the administrative ministry, and this is agnostic to export or domestic market. It is for growing that sector in the economy. It will definitely have a positive for the exports also. We normally don't do sector-specific schemes or incentives for exports per se. So that is something not been our practice in the UOC. Under the export promotion mission, we have already rolled it out. We have around 11 components that we have planned as a part of the export promotion mission. 3 of those guidelines are in public domain and on which actual work has started, and industry is actually going to take benefit of them in these 2 months. Already some of them sanction orders and all are being issued. 6 more guidelines are going to be announced in next 10 days. So 3 plus 6, we'll have 9 guidelines which will be completed, announced for industry to actually take benefit of it. There are 2 more guidelines which will be left, and we'll try to finish them off also in the month of February. a complete framework under the export promotion mission which is available to the exporters, and they can try to take their due benefit. Largely, if you look at, this is more attuned to MSMEs,
Yeah.
and if they are able to take benefit under this, I think many of their pain points will remain addressed and they will be able to plug into export supply chain in a much bigger way.
Let me ask you a question as far as the macros are concerned, Mr. Agarwal. The current account deficit at this point in time, the government has said that you're comfortable with the situation, even though we have seen a significant decline and a depreciation in the rupee. I just wanted to get your thoughts on that, the currency depreciation as well as the macros, how you're looking at that. And there was a lot of chatter around the fact that the government may try and put in a duty to curb the import of gold and silver. We didn't see any duty imposition, but does the import bill on account of gold and silver concern you?
Definitely, two of the biggest elephant in the import bill are energy and gold and silver. But however, this year I think we are doing good on our import front also. The import growth this year as compared to last financial year has been slightly subdued, not very subdued, but slightly subdued. Our trade deficit still will go up a bit, but it will not go up substantially. My sense is overall trade deficit will go up by $15 to $20 billion by the end of the year. But that I think with the overall trade growing on both sides, import and exports total growing by $80 billion this year as compared to FY26. I think this is FY25. I think this is something that we can live with.
And the rupee, sir, that's helping exporters for sure at this point in time. Does it? How much of the tariff hit is it helping provide a buffer for?
I think the rupee depreciation does help exports, but then you also need to remember, I need to export more to get you the same dollar numbers.
Yes.
So every time when I say that we are doing better in exports, this is in dollar terms.
Yeah.
And if I'm doing 2% there, then I am actually doing 7-8% to do that. So that is also to our strength of our industry who has been able to take advantage of this and actually ramp up the exports.
Right. Gokul?
Congratulations, sir, on the EU FTA. It is a landmark deal. One of the things that it will be good to hear is this controversy around CBAM continuing to apply to the Indian exports. And secondly, in the budget, there's a provision for 20,000 crore spent on some form around carbon capture. Is that connected to enabling the export from some of the sectors which are impacted by CBAM?
Thanks. I think on CBAM there has been a lot of discussion with the EU also. We need to understand CBAM is a horizontal regulation. This is a regulation which they have brought in which is equally applicable to the domestic industry also in the EU and also for the imports. This is one regulation on which there is no derogation that they have been able to give to any country thus far. But what we have been able to secure as part of FTA is two kinds of commitment. One, in case there is any flexibility that they are able to extend to anybody in the world under CBAM, India gets it automatically. So we will never be worse off than anybody else as far as the CBAM regulation is concerned. Two, we have also been able to get a technical dialogue set up as part of FTA wherein we will get clear insight into how the CBAM is calculated, how the CBAM levy is being worked out so that our industry is able to understand it clearly and align its supply chains accordingly. Two, we have been able to push them to see that the local verifiers in India are also accredited so that our industry is able to verify that. Three, we have also ensured that in case tomorrow we come up with a carbon trading mechanism in India, the impact of the same is also linked to CBAM so that there is no double payment of levy by the Indian industry in the supply chains going to Europe. So I think this will help us to deal with this better, and that in that perspective we have done this. And three, I think decarbonization is a common endeavor of EU and India. And in that quest, we have also tried to we are working on a common pool of funds wherein EU can bring in money to help us decarbonize in India, especially in the hard to abate sectors. So that is also where they can bring in both technology and finance technical assistance to support us. That is part of their joint statement also.
Yeah.
And once you get the fine print of FTA, you'll find a mention of that also in the FTA.
We've also got Christian Arora from Grant Thornton. He's got a question for you, Mr. Agarwal. Go ahead.
Good evening, sir. I just wanted to, get your thoughts on the speculation which was around announcements or revival of PLIs. And we, in the economic survey also it was mentioned about, the success of PLI, but also looking at reviving them in some form or the other. But there were some announcements specifically for certain sectors. But beyond that, the thrust sectors and the strategic sectors, is there any thought that PLI schemes would also be part of some of the thought process which will come in, as we can see?
See, I look at PLI or any other such scheme in a very broader perspective. If you look at historically also, governments have been supporting, giving sectoral support for domestic industry to grow and get to some size. So production linked incentive is the incentive when the incentives are linked to production. Similarly, their incentives can be linked to employment. You have got employment linked incentive. You can have incentives linked to some other outcomes also. The idea is, can we cover up for the handicap that our industry faces vis-a-vis its global peers, so that it can do that initial journey with the support of the government, and once it is matured enough, it can then run on its own. So that is something which every government does, and the government needs to do it, and this is something which will happen in India also in some form or other.
Well, we've also got the Expenditure Secretary joining us. Sir, many thanks for joining us here. But Mr. Agarwal, before we close with you, sir, manufacturing, as you pointed out, a lot for services in the budget. But on manufacturing, sir, we are still at that 17% share of GDP, sir, despite the many measures that the government has put in place. Do you now feel confident that on the back of the additional steps taken, that we will finally get anywhere closer to that 20%? The aspirational number has been 25% for very, very long, but moving beyond this 15, 17% to even 20%, sir, by when?
I think the budget provides a right boost to the manufacturing sector. If you look at, they have been talking of 200 legacy industrial clusters which will be rejuvenated. That will provide a boost to manufacturing. They have talked of support to 7 key sectors like electronics, semiconductors, marine, textiles and others. That will also lead to larger manufacturing in this. So there is a trajectory which is looking northwards. This budget, the focus on some of these sectors and reviving those industrial cluster will only add to it. So definitely I think we are moving northwards as far as the manufacturing also concerned, but our GDP is also moving northward. So I think there is some catching up that needs to be done. But till we are both moving northwards, I don't think there is a cause of worry.
Are you being able to catch up with any sleep, considering the fact that you're probably on the phone or on Zoom calls or Microsoft Teams meetings with the US, sir?
It happens the job in the Commerce Ministry is to deal with entire globe at multiple points in time, and that's why we have got a strong team which looks into various aspects and various time zones to deal with them. Our working hours are a bit different, but at the same time I think they are more satisfying with these FTAs coming to fore. I think any kind of work is satisfying and is good to look up to now.
So how many all-nighters did you pull in the last lap leading up to the EU FTA?
I think EU-FTA last 3 weeks were tough because both sides had a deadline to meet and there were things we needed to close. So there was hard work and teams needed to work. But because we are only 4 hours apart, I think we could manage it much better.
Well, Mr. Agarwal, we hope that, as you said, it takes 2 to tango, that we actually see that tango result in something soon. But many thanks for joining us, answering so patiently the many questions that our participants here have put to you, and for explaining to us the thinking, the rationale and the priorities of the Ministry of Commerce. Many thanks indeed. Ladies and gentlemen, a big round of applause for the Commerce Secretary joining us here on the CNBC TV 18 Budget Verdict. We will take a break.
Thank you.
The conversations continue. The newsmakers, the headliners will join us. We'll be joined by the DPAM Secretary and the Expenditure Secretary after this very short break. Stay tuned. You're with the Budget Verdict.
You've heard the
In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is in the interest of minority shareholders. I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%.
And we brought it down to around 17,000 in the RE. You know, the drinking water is really the one where the Jal Jeevan mission is being implemented, and during the course of the year what was found was that there is a need for sort of resurvey, re-examining, streamlining the procedures. So it went through that kind of an exercise. But if you look at the BE 2627, you will find that now that we have the certainty that the scheme is ready for full-fledged implementation, the 67,000 crore is brought back in the BE 2627. So it's moving on, yeah.
So if I could just double down on that, are you suggesting then that there were inefficiencies in the manner in which the scheme was being executed, there were perhaps leakages, etc., which led to an overall examination or re-examination of the scheme? Have those issues now been addressed, which is why you feel comfortable to bring the number back to 67,000 crores versus the RE of 17,000 crores?
Yeah, it's all streamlined and we are set to sort of have a full-fledged this thing in the new financial year. Yeah.
Okay, but there is still, sir, quite an overall gap between the budget estimate and the revised estimate on the expenditure front. You gave us an example of one scheme, but there seems to be expenditure compression across a whole range of schemes.
What happens is some of the items where the scheme is brand new. So for example, again, let's pick up in the Department of Science and Technology, the Research, Development and Innovation scheme. It's a huge scheme, we can talk about it more, but for the first year where we thought the 20,000 crore outlay which could be utilized, but then it's such an innovative kind of structure that the second level fund managers are just coming on board. So again, we had to scale it down to the level where the allocated funds can be utilized. But again, in the B26-27, if you see, as approved by the cabinet, as announced in the cabinet in the budget speech last year, it's coming back to 20,000 crores. So these are adjustments which happen over the year to see that required funds are provided where they are utilized and scale down where the immediate requirements are not there. Yeah.
So then that brings me to a larger question, sir, and I asked you this question when we met yesterday on the execution ability and the execution capacity of the state to be able to spend money. And, the industry's ask, as I pointed out, was that a much larger capex number would have perhaps spurred the economy even more. And your response was that at this point in time, the state's capacity is to do 12.2 lakh crores or thereabouts, and that's the number that you've put down for public capex. Is that what we should understand, even when you talk about the RDIF, for instance, that you could put larger numbers there, but the execution capacity, the state capacity to be able to deliver on those numbers is perhaps constrained at this point in time?
Let me put it this way. What the budget speech also put right in the beginning, the fiscal prudence and the macroeconomic stability, the numbers which have been mentioned, enables us to provide resources where required. And the 12.2 lakh crore rupees which you mentioned for the capex is again a fairly big jump, but the government is in a position to provide. And with all the esteemed audience that is here today, it's really a collaboration. So where, for example, on national highways, when we say 10,000 kilometers have been constructed in each of the last few years, it's with everyone working together. It's not a government official who goes and constructs. When we say 3,000 kilometers of railway lines have been laid, it's again not a railway official who has gone and done. It's with some private company, some industry, some people who have all worked together. When we say 1,000 kilometers of metro rail network now available in our country, it's again government agencies, private contractors, everyone working together. So we put the money where the need is there and where the implementation capacity is there. That's how we do it, yeah.
Okay, so yes, implementation capacity is crucial to the manner in which budgetary allocations have been provided for. But Mr. Chawla, let me address the other elephant in the room. Why did the government lose its disinvestment mojo, and what has enabled you to find it back, or hopefully find it back? You put a larger disinvestment number of 80,000 crores. But, what was the reason why we saw you go slow on disinvestment? I'm not even getting into privatization, and why do you now feel that you want to be seen as reviving that agenda?
Government has not lost the disinvestment mojo, nor is it off the track. If you see how the disinvestment policy evolved, the Department of Disinvestment was set up somewhere towards the end of 1990s, and in the first 5 years was the learning phase where we initiated the disinvestment experiment. And somewhere around after 2004, for the 10 years, there was a hiatus, there was a window when disinvestment was put on the back burner. In fact, there was a talk about doing away the department itself. But in the next 10 to 12 years, which is the term of the present government, the disinvestment was reinvented as a composite strategy. That is why we are not called Department of Disinvestment anymore. We are called Deepam.
Yes.
And that means we light the lamp in the lives of ordinary investors. To do that, we follow a composite strategy. And that composite strategy is guided by what is called the Atmanirbhar Bharat policy for the public CPSCs, which was announced by the government in 21-22. Under this policy, we have arranged the public enterprise domain into three verticals. The strategic domain, which is essentially for delivery of public goods, and for ensuring the continuity of our supply chains, like natural resources, core infrastructure, defense, financial infrastructure, and so on.
Right.
Then there is a category called the exempt category, which is not-for-profit functions, which are the social functions, support to vulnerable groups, support to farmers, essentially the market failures that government needs to take care of. What is left is, in a way, non-strategic, but in a way it is an invitation for the private sector.
Yeah.
And this includes a large number of enterprises which were erstwhile engaged in manufacturing. And in this non-strategic area, we take up both strategic disinvestment and closure as a composite strategy. Because in a macro framework, whether you disinvest or whether you close, it creates greater space for the private sector. It allows them to operate and acquire a greater share of the market and energize the economy. So it is part of that strategy. We've taken both of them together. Almost 25 enterprises have either been strategically disinvested or closed in the last 10 years, which is the highest ever done in the past, And going forward, we continue to revive this momentum. We have learned from certain iterations do not succeed, certain others succeed.
Okay.
The idea is to learn, reinvent the strategy, and move forward. And that is why you see a large number of 80,000. It does not scare us. It is done with our consent, and it reflects our confidence in our ability to achieve it. And if you ask me how this will be done,
yes,
we will use both traditional disinvestment methods. We will use a variety of market sales. And in addition to land monetization traditional, we have now invented and perfected new modes of asset monetization. And if I may mention, one of them is public InvIT. We got the SEBI approval in December.
Yeah.
And we hope to launch the first public InvIT before the end of the financial year. InvITs, as you know, are capital market equivalents of risk capital, which help us monetize the present value of user fee and redeploy it to create assets.
Right.
Honorable Finance Minister also announced in the budget yesterday that we will launch REITs for CPSCs to monetize their surplus land. This will help us securitize the future rental revenues and redeploy them in redeveloping these surplus lands without putting any burden either on the budget exchequer or on the CPSC, and be able to create greater use and put these idle assets to productive use, and also invite private sector participation.
So, plenty that you've laid out for us there in terms of what the DPAM strategy is going to be. How many lights are you going to light, lamps are you going to light this year, Mr. Chawla?
Excellent question. Let me give you numbers. 12 years ago, the number of DMAT accounts in our country was 4 crores. Today, it is almost touching 21 to 22 crores. So how many times is that? 5 to 6 times. And if you see the dividends, the fair dividends which CPSCs distribute, the CPSCs achieved record profits of 3 lakh crores last year, and they distributed record dividends of 1.4 lakh crores. And our analysis, if I may use a technical term, provides evidence that the CPSCs have first and second order stochastically dominated the Nifty 50 companies as far as dividend distribution is concerned. And with just 15% market cap, the CPSC has distributed 25% of the dividends distributed on the entire stock market last year. You can count the number and millions of lamps that we have lit.
Millions of lamps that you've already lit, and there's hands going up, so I'll get questions, but just to follow up on that, the REIT that the finance minister spoke about in the budget, what are we talking about in terms of the land bank monetization? What is going to be the size that will be part of this REIT, and any timelines by when we can actually see this REIT being operationalized?
Okay. This is going to be a new experiment. We've tried traditional methods of land monetization, which are difficult and time consuming. This is going to be a securitized mode where the title can remain with the CPSC. The land title does not have to change.
Okay.
But still, you can securitize the present value of its future revenues and use that to redevelop the same through a developer model.
So will it be individual CPSCs that will do these REITs?
Absolutely. We will identify specific assets, specific areas, surplus areas, and we already have done some homework. We'll sit together with the CPSCs, we will identify the developers, we will create technical consultants and a securitized framework where institutions and even people can invest and we can redevelop.
How many CPSCs are on that list, on that short list that you said you've identified, the homework that you've done?
Let it evolve. It may not be right to give out the names right away.
Okay, but before I go back to the Expenditure Secretary, the appetite for privatization, do you still have the appetite and the mojo to do privatization, or IDBI Bank, one and done?
Not at all. Already, two privatizations have reached stage 3, which is the stage for bidding, that is the technical and financial bids. Everyone remembers Air India, but many people forget that after Air India, Neelachal Ispat Nigam in Odisha was successfully privatized with the Tata Group, and it is now running, and it's a going concern with its mojo back. And very recently, just in the closing year, we closed the deal for Ferroscrap Nigam Limited with a Japanese firm, Konioko. That deal has just closed just a few months ago in the last year.
Right.
And the enterprise is running successfully and it is looking up. More will come, but it will not be fair for me to give the transaction-specific details.
Okay, fair enough. Expenditure Secretary, let's also give our viewers an understanding of what the 16th Finance Commission has put out by way of its recommendations, because that's another important document with important recommendations. I think everybody's only understood the big headline number, which is the 41% devolution to states that remains at 41%. But some of the other changes that the 16th Finance Commission has brought about over the 15th Finance Commission's recommendations, and what that will mean for both the centre as well as the state, if you can explain some of those big highlights.
So the Finance Commission is something that decides on the sharing of taxes between the central government and the state governments, and it's a constitutional provision. So they are constituted, expert bodies are co-opted into that. So the Finance Commission, the 16th Finance Commission recommendations have been accepted and approved by the cabinet along with the budget documents. So it goes together, and it went together this time. And the 41% which has been mentioned is that 41% of the divisible pool of taxes will be shared to the state governments. And this is same as what was done by the previous, the 15th Finance, and somewhat similar to the 14th, but it's a big jump up if we go back beyond the 10 years, because it was 32% earlier.
Yes.
So there's a huge sharing of resources now with the state governments, and even at that time with the 14th Finance Commission, the central government had approved it, and we continue to accept that, and this time the 41% of our divisible pool of taxes will go to the state governments for them to utilize in whatever manner that they deem fit within their system. So that is one part of it. The other big thing which the 16th Finance Commission has done is really to boost the support to the what we call the 73rd and 74th Amendment related local bodies, that is the urban local bodies, the rural local bodies.
Yeah.
So the 16th Finance Commission has recommended that monies worth rupees 7.9 lakh crore will go to these local bodies from the central government, and to understand the magnitude of the recommendation, it's almost a doubling of what the previous Finance Commission had recommended. So really in some ways it's a huge jump, it's a huge outflow from the central government, but we also see it as a sort of, what to say, a whole of government or maybe even a whole of country kind of development at the cutting edge. You know, it's ultimately whether it's in the big cities or in the rural areas when the local bodies are really activated, our municipal bodies, our municipal corporations, our panchayati bodies are activated and fully up to the mark that our daily lives will be affected. So again, central government has accepted. So these are the two very big recommendations that the 16th Finance Commission has made.
And those are important, as you point out, and specifically the ones that you talked about to strengthen urban bodies. I think that is an important recommendation as well. Mr. Kanabar, go ahead, sir.
A quick question, sir, on privatization. This whole proposal to say that even if the government shareholding goes down from 51 to 26%, you'd continue to regard an enterprise as being a government enterprise and continue to sort of exercise. What's the plan out there, and is that really also giving impetus to this 80,000 crore amount budgeted?
Good question. If you read the economic survey carefully, it talks about alternatives. 1/3 of listed CPSCs are already below 60%, and that much public wealth has been shared with the shareholders, minority shareholders. Going further, we have various options, various alternatives. Economic survey, as you know, is an ideation document. The economists are free to ideate. The policymakers have to be more cautious. So,
but you just finished telling us that you got your mojo back, or your mojo never left.
Absolutely. Our mojo is back, and back with caution. So the alternatives
it's cautious mojo.
The jokes apart, the alternatives are being considered. One alternative is that you change the definition of a government company. The second alternative is to enter a strategic partnership mode, where you bring in a strategic partner, come down en route to a final privatization. Another alternative could be a joint venture mode, again with both private partner or public partner. A fourth alternative could be a mechanism where other government entities help you dilute. It does not remain a government company. It acquires the flexibility and the freedom to operate, and still being in a strategic area, the public control, a looser control, both directly and indirectly, is maintained to achieve the public goods. And yet, through all these modes, we can share greater wealth with the minority stakeholders, and also give more freedom to enterprises to operate and compete with the private sector in the open market. All these options are on the table. The pros and cons will be considered. One option may be suitable in a particular scenario. Another one may be more appropriate in another one. And that's how we take the best step forward.
But what would be most feasible, Mr. Chawla? You know, bureaucracy is also ensuring that you do the art of what is possible. So what do you think would be most feasible? Because, you know, I'm looking at it from a point of view, a strategic investor, etc. Would they not prefer a clean-cut privatization? I mean, you want to get out of something, to the person who's coming in. Don't you believe that that would perhaps be the most feasible way forward?
Not just bureaucracy, the private sector and the market is also about the art of what is being possible. So what we do is to maintain a set of options. When we do transactions on the market, we don't go with one transaction. We always have a repertoire of 3 or 4. See the market conditions, see the assets, underlying fundamentals, and seize the opportunity. In the same way, we have various options. Sometimes, say a public enterprise has a heterogeneous set of functions or operations. The private sector is now getting more and more specialized. So if instead of trying to privatize a heterogeneous set of operations, we can follow a cost center approach or try to privatize a vertical which is more easily privatizable, then the chances of success increases. And that is why we are talking about a multi-pronged approach and flexibility so that we move forward in the right direction in which the government and the Honorable Prime Minister wants us to move.
Okay. Mr. Vaidyanathan, you had a question, sir.
No, but just curious what happens like underneath, in making of the budget. There are so many conflicting priorities. You have, GDP growth, you need fiscal consolidation, you need investments of like massive scale, like 12 lakh crores in infrastructure, you need process reforms, that is one push. On the other side, social sector, SMEs, just so many priorities. And in the end, you're delivering a budget that is so consistent, that is, over the years. And of course, we can see that. So just curious, what we see is a final shiny output that we saw, which is so consistent with what all of you are speaking. Underneath, under the hood, how do you deal with conflicts that are happening here? There must be, and one or two instances on how you solve them will be curious, because for a government to deal with conflicts is quite amazing.
Well,
I'll request my friend to take that question.
Because he probably has to deal with most of the pulls and pressures, given the fact that he's looking after expenditure and there's competing priorities that you have to balance. But that's an important question as well, sir. And, it would be nice to understand how you've been able to balance the needs and priorities as well as the competing interests that land on your table. What happens in the quarantine period? Under the hood, Mr. Vaidyanathan tells me.
Yeah, so, for a massive exercise like this, which, as rightly said, has so many competing requirements and competing priorities, I think the starting point, very important, is the clarity of what are the top priorities. And the first top priority that was very clear, which comes out very clear also in the very beginning part of the budget speech, is the fiscal prudence, the macroeconomic stability, that the inflation is at a moderate level, so that aspect, the priority of it was very clear right from the beginning. So that sets one kind of a framework. And the next is really what we discussed a little bit, the focus on the capex. That again was something which was very clear from the beginning. The creation of infrastructure, we are at a stage where as a country we really need to create infrastructure more and more. So these were some of the guiding principles which were there right from the beginning. And within that, again, if we see there are sectors which require support, segments of society which require support. For example, the farmers have to be assisted, the youth have to be provided various opportunities. So those then add on. So in some ways, the clarity of these two big points really then helps in unifying the massive exercise that goes on for several months, so that's how it is, yeah.
He's trying to get cues for how he's going to operate in his boardroom, sir.
No, really, this is great. But the additional thing is that how do you stay clear of populist things like, given money to people, you could have waived off farm loans, could have done all the kind of stuff. And it wouldn't have been great. We all understand that. If you had given away 2,000 rupees to every woman in the country, you could have spent off 10 lakh crores and made maybe 200, 500 million people happier. Wouldn't do any good. We all understand that from an economy point of view. But how do you resist that? For 10 years straight, we've been observing you stayed the course of investing in capital and create growth through that route, and not not fall for these short-term incentives or short-term priorities.
So let me add to that. The focus or the attention on measuring the output and the outcomes. I think that is another pillar which really strengthens the budget making process. Some of the unconditional kind of transfers and all are at the end of the day not very easy to measure. So again, the focus, which probably for all of you in private sector may be something very natural, but something which now government has really taken upon itself. So in fact, we publish an output and outcome monitoring framework, and we try and see that we move on. And to that, let me add, I think, what does not come out in a stated sentence, but what is very clear, since you mentioned, say, a decade of sort of continuity, is the trust in the private sector. So why I say this? For example, one of the prominent items this time is the, let me try to illustrate, the semiconductor mission 2.0.
Yes.
Now, that is ahead of us, but if we just step back, semiconductor 1.0, a huge outlay, something like 76,000 crore rupees,
yes,
is basically something where government is saying to the industry, to the private sector, please come forward, make the projects, identify the locations, and the state governments have also been, I must say, extremely proactive and supportive. They've provided the land, they've even topped up the financing support and everything, and really a private sector led initiative where something extremely critical as a country is coming up.
Yeah.
Rare earth was mentioned again this time in the budget. Rare earth corridors are being set up, and it's a recognition that in fact we have the third largest deposit of rare earths in the world. Our beach sand and all these are rich in rare earth. It's just that we have not got our act together. Now again, if you step back, last year the rare earth processing mission with about 7,000 crore rupees was approved. Again, something where it's not a PSU or a governmental department which will do it, but really private entities who will work on it, private project proponents who will come forward and will get the support, and along with the government agencies, along with the IREL and the others, will really get onto the rare earth processing. So, and various others. Even the RDI, which we just mentioned briefly, the research, development, and innovation, is really a private, an initiative where private sector is being put in the forefront, because the second level fund managers, when they get into project selection, which innovation project, which scientific invention to fund, it's really a firewall from the government. They have their free hand. The fund manager has a free hand. So really it's another pillar in our budget making, that the private sector, the dynamism of private sector is something which is really being relied upon to lead the economic growth, to development, the infrastructure creation and everything. Yeah.
Well, yes, a quick glimpse there from the Expenditure Secretary on what goes into the budget making exercise. I'm sure he hasn't given us exactly the flavor of what happens when they go into quarantine. But before I get more questions, Mr. Chawla, my question to you, many public sector companies are still not meeting the minimum float requirements. Now, what can we expect on that front? Also, is there a pipeline of IPOs from the CPSCs that you're working towards? Is there a short list of candidates that you're readying for IPOs, sir?
Thanks for asking that. We have evolved a waterfall mechanism, which essentially means stage 1, stage 2, stage 3, stage 4. Stage 1, we identify a CPSC which meets listing criteria. Once that CPSC is taken up for stage 1, which means we launch an IPO and we try to bring the government equity down from 100 to 90. Once it has successfully crossed that level, we are confident a sufficiently thick market has been created, or a sufficiently stable market, reliable market has been created. The next step, which is stage 2, is to bring the government equity down to 75, which is the minimum public shareholding level. Like in any market, in any process of creative destruction, everyone will not succeed. Our experience is that almost 80% of CPSCs succeed to reach this milestone, but about 10 to 20% also fail to live up to the market expectations, which is when they go up into closure. After a CPSC has reached 75, successfully survived in the market, we have two more stages. One is 60 to 75. This is the stage of dividend disinvestment trade-off, and also a stage where the CPSCs start mobilizing capital on the markets through various options and routes that is available. We always encourage them to do that. And you saw the BCCL, the Bharat Coking Coal listing recently.
Yeah.
It was the highest, most responsive. It broke all records. 94 lakh investors and stakeholders participated in that IPO. And going forward, this company, which needs to modernize mining operations, invest deeply in the capex, will now have the market, the capital market, to raise those resources and invest in those operations. We are going to follow the same strategy for many other natural resource companies and their subsidiaries. Once we have reached below 60%, we are cautious, because that is the zone that is near the edge of the cliff,
right,
where for capital management, for capital restructuring, the CPSC needs that cushion. And so this is how it works. We are going to pick up a few more CPSCs for bringing them down from stage 1 to 2, from 2 to 3 in the coming year. And that is why you will see a few more OFSs or market operations or qualified institutional placements within this financial year, and also many more in the coming financial year.
Okay, so many more OFSs in the future, but also within this financial year, i.e. by March 31st this year, 2026, we are going to see more OFSs and perhaps also QIPs. But you know, sir, I'm trying to think, was it 2 budgets ago? I think it was 2 budgets ago that the finance minister had said insurance companies will also be up for IPOs. What's the plan on that front? LIC is of course done, but any others?
See, the General Insurance Corporation has been successfully listed, and it has also successfully crossed stage 1 of the waterfall mechanism. It's and it's there, it's doing well. It's also undergoing, it's reviving its refinance operations, and also branching out into other countries in the region. The LIC IPO was also a great success. It is already, the first IPO is done. Don't ask me when the next one will come. But when the timing is right, we are ready. But when the timing is right, market is right, and we think it is the right step forward, we will take it.
Okay, Ajay.
Good evening, sir. Sir, as I saw it, the 80,000 appeared aspirational, but you've clearly explained you almost have a deal by deal working for that. 2 related questions there, sir. One, in the last year, we saw a few banks where you moved the stage 1 to get into the public float. Given a couple of deals which have happened on foreign banks, can we see some of that stage 1 moving directly into strategic now, given the interest? And second question, sir, is what's the plan on Vodafone? I saw that come into the books this year. Is there a plan, or is it too early and it was only to give them a AGR relief and then, the plan will come subsequently? Because that's a big number again.
2 smartly worded, sensitive questions. The first one, let's do the big one first. Okay? Honorable Finance Minister announced yesterday the setting up of high-level committee on banking. So that is a step in the right direction. We'll come to it down the road. On the second one, we hold minority stakes in Vodafone Idea Limited, and we do not participate in the management. And that is going to be our strategy, and I would not like to speak any further on that.
Okay, so nothing more to be said on Vodafone at this point in time. But gentlemen, there is one question. Let me go across to gentleman here before we take a quick break. Go ahead, sir.
Hi, Anshul here from representing Aspero. I just, so since you guys have mentioned that there is a sustained push on public capex, we're also seeing government borrowings growing, although net borrowings have grown marginally. But what is government's plan to ensure that, there's no long-term impact on the interest rates and also crowding out of private investments?
See, we monitor the public the capex of public enterprises on monthly basis. And the target this year was very decent and good, about say public enterprises and public bodies to invest about 6 to 7 lakh crores in capex this year. It is on track, and as per our last information, almost 70% of the target was met by December. And we endeavor to provide a graduated, consistent support to the economy through this mechanism. And we have built in the capex performance of public entities and CPSCs into their MOU framework, which determines the corporate performance, also determines the pay and the perks of the corporate leadership. And that works. That helps.
Okay, Expenditure Secretary, I'll give you the final say, sir. So, before you leave us, how confident do you feel about the state of the economy as well as the growth estimates that the budget has held out?
We are extremely confident, and in fact, the GDP numbers, the growth numbers are all put at a very realistic level. So it's not at all shooting beyond what is likely to happen. So we are very confident on that. And before I close, on the budget as a whole, it's almost as if every sentence has meaning. So why I say is, for example, some of our esteemed listeners may be in the export business. So that one sentence about customs integrated system, for example,
yes.
Government is now equally sensitive on the number of forms that have to be filled up by an exporter. So while the ICE Gate 2 has come up on one side, the back end of it, the customs integrated system, for example, is something we look forward to very much as something which will improve the things. Then again, the other one sentence about the governmental agencies who have to sign off before an export has to go out or import has to come in, the food safety, the animal quarantine, plant quarantine, it's a disjointed kind of thing, So now, single, unified, IT-based platform where any exporter, any importer can, in that one platform, in a monitorable way kind of thing, bring in all the things, So, and the third, for example, again, another small sentence, the Bharat Vistar initiative, which is really to use the power of IT on the agri side, agriculture, agri stack, which is really entire farmers database, the soil health database, the crop production database, and link it to the ICAR database of knowledge. So again, it's just one sentence, but the way in which farmers all across the country, in the hinterland, everywhere, will be able to access the best knowledge and also then utilize the most suitable fertilizers of the appropriate quantity and of the crop type which is required. So these are all very promising. So besides the big ticket items which have been mentioned, really all parts of the budget are something which really gives us much optimism.
Well, speaking of all parts of the budget, sir, the budget also talked about mountain trails in Himachal and Uttarakhand. Which trails are the two of you going to be hiking off to now that you presented Budget 2026? Expenditure Secretary, I'll start with you.
We'll try to go for both.
Well, good luck with that, gentlemen. Many, many thanks for joining us here and for giving us a very clear understanding and a path forward on how you present the execution of the promises made in Budget 2026. Ladies and gentlemen, big round of applause to the Expenditure Secretary and the DPAM Secretary. Many thanks for joining us. We are going to take a break here on CNBC TV 18. Our conversations will continue. We'll be joined shortly by the Chief Economic Advisor, Ananta Nageshwaran, the DFS Secretary, Mr. Ragaraju. We'll also have the Defense Secretary joining us, Mr. Rajeshwar Singh. All of that and more coming up for you on the Budget Verdict. Stay tuned. We're back in a minute.
In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up ABGC Content Creator Labs in 15,000 secondary schools all over the country and 500 colleges. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for self-reliance in natural fibers, such as silk, wool, and jute, man-made fibers, and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions.
Hello and welcome to CNBC TV 18. I'm Archana Solanki. Here are the headlines we're tracking this evening. The Wall Street recoups some of its losses after the budget sell-off. Sensex and Nifty gain over 1% in the late trade. Nifty ends above 25,000. Broader markets underperform. The Indian rupee strengthens 48 paise to 91.51 against the US dollar, posts its biggest intraday gain in 6 weeks. Sustained dollar selling by state-owned banks helped ease volatility and stabilize market sentiment. Global markets slide after the crash in gold and silver prices. Fears of an AI bubble also rattle investors. Asian markets see steep cuts. South Korea halts trade temporarily after a 5% fall. Bitcoin below $80,000 adds to the pain. European markets stage a recovery. Commerce Minister Piyush Goyal says there is good synergy about a trade deal with the United States, adds he is in regular touch with US Trade Representative Jamieson Greer. Petroleum Minister Hardeep Puri confirms India will be buying oil from Venezuela. External Affairs Minister Jai Shankar heads to Washington to attend a critical minerals convention. Southern states will get a higher share of tax revenue under the 16th Finance Commission's devolution formula. Karnataka will be the biggest beneficiary. States in the Hindi belt will see a minor drop in their share of tax revenues. India's car makers hit the accelerator in January. Sales momentum holds post GST cuts. Double-digit growth across the board. Maruti Suzuki posts record volumes. Tata Motors and M&M's shine. Steady demand across EVs, SUVs and exports. Alright, let's start with the day's market action. The Wall Street recovered some of its losses after the budget sell-off. Nifty and Sensex gained over 1% to end at the day's high. Nifty closed above the 25,000 mark, led higher by Reliance. Broader markets underperformed the blue chips. Apart from IT, all sectoral indices ended in the green. The Indian rupee gained 48 paise against the US dollar, posting its biggest intraday gain in 6 weeks. The RBI is reported to have supplied dollars in early trade, but dollar demand from funds was weak as per dealers. Lata Venkatesh is here with more. Lata, what sparked the rupee rally?
Well, first up, the way in which the rupee rallied itself was a bit reassuring, 0.5% on a day when actually the dollar was stronger. So that the amount of the recovery, 0.5% from 91.98 to 91.47 thereabouts, is a very, very big rally. The reasons, early morning, the expectation was that the rupee will do badly because stock markets had reacted negatively to the budget on Sunday. But, and therefore, in the NDF market, the offshore market opens before our market, onshore market opens. In the offshore market, the non-deliverable forwards, the Reserve Bank intervened heavily to ensure that when the rupee opens here, it doesn't open very badly, which is what happened. It opened gap up. But thereafter, what dealers tell us is that RBI didn't have to supply much dollars and do the heavy lifting. There was anyway not much demand from foreign funds asking for dollars. You know, they usually sell equities, buy dollars and repatriate it. That demand was very weak today. And the guess is that even in New York, you found the dollar, on Friday rising versus most commodities. Commodities were a bad word on Friday, as we know, most all precious commodities and even copper and aluminum and zinc all fell. The rupee was being shorted against commodities and commodity currencies. Because they were falling, the rupee actually got a relief, and that continued in the onshore market on Monday. The negativity surrounding the budget also clearly ebbed in the stock markets and seems to have ebbed in the rupee market too. And now most dealers were telling me that probably 92 rupees to the dollar is not going to be crossed anytime soon. They felt that reassured about the rupee. Just one word on the bond market, that market crashed. The very high borrowing number, higher than what the market expected. Market was prepared for about 16.5 lakh crore. The borrowing number announced in the budget was 17.2 lakh crore. And so nobody wanted to touch bonds. You saw a big sell-off and yields rose.
Right.
For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for Self-Reliance in Natural Fibers, such as silk, wool and jute, man-made fibers and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further,
what are the cornerstones? What are the pillars that both sides are working on, at least as far as this reciprocal tariff framework is concerned?
Largely, see, reciprocal tariffs are in the goods space. If you look at these tariffs are in the goods space. So one of the key discussions in this is how we are able to align our tariffs on both sides to see that we work towards a more balanced trade between the two nations. So that is going to be the core of whatever we achieve in the first. Aligned with that, when you, as you mentioned, tariff itself is not the driver of trade. The entire ecosystem, the policy certainty or the non-tariff issues also needs to be addressed. I think we are trying to discuss on both sides to see that when the deal gets finalized, both sides are better off than where they are standing.
How much convergence is there today, Mr. Agarwal, on the framework to deal with the reciprocal tariffs? Would you say we're 90% done, we're 80% done, we're 50% done? How much convergence is there on both sides?
I think you heard my minister a few days back where he said most of the sticky issues are now out of the. So that's where I will leave it, that most of the sticky issues are are more or less resolved. So we are progressing fast. Let's see what happens.
For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for self-reliance in natural fibers, such as silk, wool and jute, man-made fibers and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom and handicrafts. As I begin part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. aim is to transform aspiration into achievement and potential into performance, as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Viksit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to act. I propose to provide tax holiday till 2047 to any foreign company that I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants As I begin Part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance, as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Viksit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing. I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up ABGC Content Creator Labs in 15,000 secondary schools all over the country and 500 colleges. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up ABGC Content Creator Labs in 15,000 secondary schools all over the country and 500 colleges. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for Self-Reliance in Natural Fibers, such as silk, wool and jute, man-made fibers, and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco Initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up a mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom and handicrafts.
And with that, it's a wrap on this special broadcast. On the other side, we'll have the budget architects with us.
Back. You're watching the CNBC TV 18 Budget Verdict live. Welcome back to all of our audiences on television, the viewers tuning into us on YouTube, and of course our audience here who's gathered in the capital to listen to the budget architects, to our policymakers on the strategic rationale for the decisions and the priorities identified in Budget 2026. With great pleasure, let's welcome the Chief Economic Advisor, Anantha Nageshwaran, here to the Budget Verdict. Mr. Nageshwaran, many thanks for joining us here on CNBC TV 18. And here's a fun fact for those of you who've been following the CEA and his economic surveys. He's presented two. This was his third one. And there's been a lot of convergence between what the survey has prescribed and what the budget has taken forward. So as I told him yesterday, he delivered a hat trick. So Mr. Nageshwaran, four. So let's start with that. As you put the economic survey together, and in your own words, this was longer than usual, 730 pages at that. How did you identify the areas that you believed would need to be prioritized by the government, and then they found their way into the budget? Take me through the process of putting together the economic survey, the rationale behind identifying the sectors that you chose to prioritize.
Thank you, Shireen. Happy to be here, and thanks for having me. The selection of topics actually is sort of a year-long process. From the time the survey finishes the year before, whatever keeps happening, and we kind of store it in some sort of a repository. We keep accumulating both the empirical developments, data and everything. But the choice of topic for prioritization as far as this particular survey is concerned, I am referring in particular to chapter 16, because the rest of the, many of the other chapters kind of choose themselves. They're part of the routine. What requires deliberate decision making are two things. One is what are the special essays we focus on, and the other one is global development. So this time global developments played a very big role in the choice of chapter 16 to be added, and that too in two parts. And urbanization, I think, from the way we see traffic flows and quality of life, pollution, etc., we decided to take it up. And AI, I think, because we wrote about it last year and much has happened since then, we felt it is important to keep track of it and keep updating the country with these developments, both macro as well as on the computing side, etc. So that is how the topics end up getting chosen.
You said that, of course, the global mix was a significant aspect of what the survey has dealt with, and how India must prepare itself for future challenges as well as possible shocks. But let me address an issue that is now starting to sort of get a lot of attention, and I think in a way you also highlighted that in your survey. Rhythm Desai on CNBC TV 18 earlier today said in the last 30 years of tracking the markets, he's never seen this kind of dissonance between the macros and the markets. The macros are stable as they are, and the markets underperforming. You've also, in a different way, asked for an examination of the investment reluctance that is at this point in time visible when we talk about FPI flows or we talk about FDI flows. How would you address this dissonance that we're seeing between very stable and strong macros and weak markets at this point in time?
So there are no clear-cut formula, a mechanism to address this, because at some point, because there have been occasions not just with reference to India, but with other markets as well, when they have decoupled briefly for specific, it could be specific stimuli that markets are focused on which is not coming, or because of global developments, or a combination of the two. But over time, they do sort of fall in line together. So right now, I think the concerns leading up to the economic survey and the budget that the markets were looking at were possibly, valuation concerns, and mainly because of the FII net outflows, which in turn was based on the fact that the tariff matter uncertainty with the United States was lingering, apart from concerns about the fact that India didn't have a specific or few AI plays in the stock market, and then whether the tariff would have any impact long term on China plus one. And also the concerns with respect to H1B and other noises coming from United States on even the services sector. So these were the question marks that people had, and also I think we had specific sector, specific concerns on IT sector, etc. in India. So the multiple factors, I am confident that over time this divergence between the two will close with the markets kind of recognizing that the India story hasn't been derailed because of these developments. That is how I see the divergence closing.
Speaking of global developments, Mr. Nageshwaran, and I want to understand from you if, how you're seeing this business about a new Fed chief in place and the possibility of now the Fed's balance sheet shrinking or being cut. We've already seen a significant amount of volatility in the commodities market on account of that. What do you foresee as a result of some of these developments as and when they do take shape? Because we still haven't seen the change or the changeover, and there's a question mark even on the changeover itself. But the likelihood of a taper tantrum, is that a significantly high possibility at this point in time?
A very fast set of questions, Shireen, but the range of questions, the number of questions we have is so wide that any answer I attempt to give will be very speculative in nature. Because we know from his previous writings, etc., that Mr. Vash had a different view on quantitative easing, ultra low interest rates, etc. But he and all of us are facing a very different environment and a very different relationship between the executive and the central bank, etc. So I think it will be premature to speculate on what stance would Mr. Vash adopt, etc., and what kind of implications would it have on the dollar. Right now, I think the markets have reacted to his appointment based on what they recall from his writings post 2008 in 2011-12 period. But we simply have to wait it out. There is no point in, because there are multiple pathways to speculate on.
No, absolutely a fair point that you make there. But how do you read into the implications of this new world order or this new world disorder, depending on how you see it? What could the implications be in the near term?
So the problem is not that there is a new world order. What we know for sure is that the old way of looking at the world or functioning has been disrupted, and a new one is yet to emerge. That is why the entire set of confusion and uncertainties, because we are in this interregnum between two world orders. My suspicion is that this will continue for quite some time. So that is, in other words, while we often say that change is the only constant or the only certainty is uncertainty, I think that is what will be with us, not just for 2026, but for a few years before we are able to settle on a new order, whatever that might be. But I think we have to accept the fact that the so-called interregnum will not be as short-lived as we would like it to be.
If it's not going to be as short-lived as it's likely to be, and I think the budget in a way sets out the framework of the choices that India will need to make, some of the choices that you spoke about in the economic survey as well, the sectors that we will need to fortify, so to speak. In your assessment, how ready are we today to face some of those challenges?
So there is no yes or no answer to that. We are getting ready in many ways, and to some extent the budget pushes that agenda or progress in getting ready to face this world forward in quite a few ways. Whether it is in the rare earth corridor matter, whether it is in trying to achieve certain self-sufficiency in key areas, including medicines, chemicals, and then giving exemptions for capital goods involved in the nuclear power generation, etc. If you think about it that way, these are all in line with what we wrote about in chapter 16 of the economic survey, where we said you have to look at the scope for indigenization or self-sufficiency in a 2x2 matrix between feasibility and desirability or necessity. That is exactly the kind of approach that the budget has taken. So it is not a question of saying country A is ready and country B is not ready, but I think it is a process. And I think what the budget signals unmistakably is that we are well cognizant of the need to undertake this process and the journey given the state of potential disruptions to supply chain, either due to logistics difficulties or as conscious choices made by nations, etc., that therefore this budget is a sort of a advanced preparation exercise for that.
You know, and just to take that forward, I'm trying to understand if there has also been a shift, a nuanced shift in the way that the government is trying to address the issue of how the private sector is going to deal with some of this. I think the government, and you've been pretty vocal about it as well, has done the heavy lifting when it comes to public capex. The government has put corporate tax breaks on the table. It's put PLI incentives on the table, and plenty more. But the ask is from the industry is more R&D subs, for instance, which the government has stayed away from. Is there now an increasing understanding or an acknowledgement within government that incentives per se or incentives by themselves cannot get industry to invest more in setting up fresh capacity and so on and so forth? That is to be done by demand. And so by giving more incentives, you may not necessarily get private capex moving.
I don't think this is articulated in that fashion quite as you put it. But nonetheless, you are right broadly that the reduction in the corporate taxes in 2019, along with the choice given to them to shift to a lower rate with fewer exemptions, and the fact that we have already implemented the suggestions with respect to the Anusandhan National Research Fund and the Research and Development Innovation Fund, spanning the TRL level entirely from 1 to 9. So there have been a lot of action on the part of the government in putting the money where its mouth is, so to speak. And if you look at the corporate sector's profitability recovery post-COVID from the lows of the second decade has been very impressive. So it is not for lack of resources. And the more important thing, again, taking the cue from what you said, ultimately corporates invest on the basis of demand, and therefore the direct tax relief last year, a substantial one, and the indirect tax relief later in the year, they are attempts on the part of the government to ensure that policy is doing whatever it can to create that demand certainty. So to an extent, I understand that the private sector is concerned about the global uncertainties, supply chain disruptions, competition coming from another country which is suffering from very weak domestic demand, and therefore substituting that with external demand by exporting, and therefore how profitable will my investment be if I create domestic capacities, etc., is a valid question. However, what I see from bottom-up data is that in 24-25 financial year, the corporate sector's investment performance wasn't particularly bad. I think 23-24 was a disappointing year. I think my analysis based on bottom-up data will be borne out when we see the full year disaggregated data coming from MOSPI later in February. So there are some legitimate concerns and questions that the corporate sector has, but we have to appreciate the fact that we are living in a country with a 60+% private consumption ratio as a percentage of GDP, and the more we postpone these investments, the questions become bigger and more pressing rather than going away, especially since I said these question marks will be with us for a few years. They're not going to dissipate. I think the corporate sector has to say that sometimes the answers to these questions will be found when we actually confront them, not by ducking them.
Not by ducking them. Do you believe that they're still on the fence? Do you get enough evidence to suggest that they're stepping out of the fence?
No, it is not purely with respect to the investment I'm talking about, because that, as I said, 24-25 data was actually pretty decent from what I can see. When I talk about confronting the question, is about taking the steps to establishing long-term competitiveness of India, and other countries which have gotten to where they did not do so in a few years. It was a marathon exercise. We have been ducking it for quite some time, relying on protection and a vast domestic market. Ultimately, you can't shield yourself from external competition for too long. And I think in a way, I welcome the recent global developments because they are making us confront these issues. We now have to focus on productivity and the private sector commitment to R&D, quality and innovation, and be able to compete in the world. Otherwise, we will be forever lamenting about about a weak currency, high cost of capital, etc. And that is what the economic survey focuses on. If you read the chapter on fiscal matters and external sector, if you want to achieve a meaningful reduction in cost of capital, if you want strong and stable currency, the answers lie in manufacturing excellence, manufacturing competitiveness, and achieving external sector surplus. Without that, we are not going to get these two aspirations that we have.
No, and that's exactly right, and that's where I want to take the conversation on manufacturing specifically. While the budget did address many of the sectors that we need to, let me also welcome the Defense Secretary, Mr. Singh. Thank you very much for joining us here. We will get to you. The defense sector got a very big allocation in the budget, but we'll get to you with all of those questions in just a second. But let's address the manufacturing question, sir. Still at about 17% of GDP, the aspirational number of 25%, I mean, it's been over 2 decades that we've been talking about that. Again, what is timing the sort of big shift or the big push that we expected to happen on the manufacturing side? And do you believe that we're now getting closer to being able to at least get to that 20%?
No, I think, first of all, that being a ratio, it's important to understand that doesn't mean the numerator is not growing.
Sure.
Right?
Fair enough.
Let's be very clear.
Fair enough, yeah.
If the ratio stays constant, and we know that it is growing in line with the nominal GDP, which is about double digits growth. So I think we are growing the manufacturing, but if you look at including whatever we have done on defense capex, or for that matter with announcing the seven high-speed corridors, or announcing a second electronic component manufacturing mission. So you name it, and also biopharma and chemicals in all of this. And more importantly, one of the things we need to do to make manufacturing profitable is to reduce input cost, which is what the exemption from basic custom duty in several areas attempts to do. And then I will also like to bring in something which has been happening outside the budget, which is that the new power sector amendment bill is talking about ending cross-subsidization by the industry of corporate and farming sector power subsidies. So that is another important input cost. So if we are able to end the cross-subsidization by the industry of power consumption by households and the farming sector, that will also mean lower cost of capital contributing to manufacturing competitiveness. So I think what has happened in this since the time we pronounced our aspiration to have a 25% share of GDP coming from manufacturing is the collapse in the real estate sector in China and the massive emphasis on external sector-led growth, which obviously has cast a huge shadow not just on India, but in fact more than on India. It has cast a shadow on several other Southeast Asian countries, etc., on their manufacturing sector. So considering how they are coping or struggling with it, I think we are doing far better in relative terms. That is something which we need to acknowledge.
Okay, let's also address the wage issue, CA, and that is something that, of course, you've been publicly speaking about as well. You believe that the private sector, corporate India, needs to do much better when it comes to wage growth, especially given the fact that they have had significant periods of strong profit growth. Now, how do you see that, and how important and significant is that going to be in this quest for nation building that you've talked about in your survey as well?
So frankly, in some sense, the labor code notification will, I believe, move the needle forward on this matter, on restoring a sort of fair share of wages, so that ultimately that is also a very important contribution to consumption growth and demand visibility for the corporate sector itself. It's about choosing the relevant horizon for optimizing one's profits. That's what I put it that way. So it's not inconsistent with the industry's own goals and preferences itself. But I believe that the labor code will definitely make a difference to that agenda. And I think of course, the attitude to work itself is undergoing a change in the household sector itself, with a lot of people preferring flexible hours and flexible arrangements, entrepreneurship. Ultimately, it's about making sure that the economy, whether through entrepreneurship or through employment, provides enough livelihood returns for households. Whether it comes in the form of wages or entrepreneurial returns is a matter of choice.
You know, speaking of entrepreneurial, sir, you talk about the fact that industry needs to get more competitive and the state needs to get entrepreneurial. Where do you believe the state has made the most significant gains in adopting a more entrepreneurial mindset, and where do you believe it still needs more work to be done?
We can be here for 2 more days discussing this, okay? So I think, by the way, quite a few people misunderstood the phrase entrepreneurial state. It isn't the case that I want the state to get into commercial sector.
No, absolutely, absolutely.
Yeah. So it was more about a particular mindset.
Yeah.
And I think some of the reform measures that have happened over the last 6 to 8 months in particular, I think the state is moving towards an entrepreneurial mindset, particularly with respect to the deregulation agenda in Indian states, which we have covered extensively in part 2 of the chapter 16. I think that is a very concrete manifestation of what we wrote about in terms of entrepreneurial mindset, and we also given an example from the software sector in the 80s, how bureaucrats at that time, actually one particular quote that I really liked from Mr. Seshagiri Rao, the electronic secretary at that time, he said, "We broke as many rules as we created them," or even more. That is coming from a bureaucrat. In order to create the software industry to rise, they ended up having to break many of their own rules to be able to do this. And that is the kind of mindset that is required. But to be fair to the bureaucracy also, you need a corresponding shift in the mindset of so-called auditing and compliance agencies to see some of these things in an ex post manner, more as a normal, legitimate judgment calls taken by the bureaucracy, and not assume malafide in some of the calls if they happen to not materialize in the right way. So that's also required. Both have to complement each other. If those things don't change, then one can't blame the bureaucracy for remaining cautious.
Fair point. As you said, we could be here for 2 days and have this discussion and the debate. But you know, you mentioned the software industry, sir, and the fact that the government in many ways allowed this industry to bloom and blossom, and today it is one of our largest exporters. Do you believe what the government and the budget has done this time around with this 20-plus year tax-free period for AI data centers is almost akin to the STPI scheme?
That is one example, definitely. Even the semiconductor mission 1 and 2 are examples of that. And I would include the high-speed train corridors on the east-west freight corridors. All of them are as examples of long-term thinking. So it isn't only in the AI data center case that I would consider this as an example of government emulating what we did on the software sector. There are multiple examples in the budget which are in alignment with that kind of mindset we saw back in the 80s.
You know, you talked about AI, sir, and it was mentioned in your budget, in your survey last year, and of course it found its place in the survey this year as well. The threat of disrupting the labor market, the threat of job losses and so on and so forth, you believe that at this point in time, that threat in the Indian context is exaggerated?
I think whether in the Indian context or in the global context, it is still early days. We are still unfolding. I mean, the labor market impact of AI is still unfolding. That is why the budget actually identifies 4 areas where skilling can happen independent of AI, and which gives our youth an opportunity other than AI related skills, whether it is allied health sector, care economy, the tourist guides, the orange economy. All these are all about creating employment opportunities in areas where human skills will be needed. So I think we have to approach this in 2 ways. One is to create a workforce that can work with the AI, and to create parallel opportunities in areas where AI will not be making a dent or will not pose a threat to labor force. That is how we are approaching this. But still, I would say, whether it is in the case of India or the world, it is still very early days to gauge whether it is going to be labor complementing or labor displacing. We are still in early days.
In early days. CA, let me end by asking you then whether you are concerned, and how concerned you would be, if at all, about the wealth migration that we're seeing. High net worth individuals leaving India or taking residency out of India, and we've seen that number go up quite significantly in the last few years. Does that worry you?
On balance, no. I think first of all, we have to put these numbers in perspective because the size of the economy also has been growing. In many matters, we look at these things for example, manufacturing, we look at it as a ratio. So here also we should look at the ratio of this wealth going out in comparison to the wealth that is being created in the country. And some of it comes back in the form of investments also. And second, we need to see this from the perspective of what's happening to wealth migration from other countries as well. And I think over time, if we are able to continue to deliver the kind of growth rates we have delivered post-COVID, I don't see this phenomena as being enduring, but more fleeting.
Okay, more fleeting. Finally, a quick check on the growth pulse, 6.8 to 7.2. That's the estimate that you've held out. Many that we've been speaking to in the market believe that the government has in fact been conservative as far as its tax estimates are concerned. And I know that you believe that you could perhaps also do better on the tax front and the growth front as well, perhaps?
Yeah. So on the growth front, I think if there is a resolution, speedier resolution on the tariff situation, I would say then the growth estimate will have a more upside risk than downside risk. As far as the tax estimates are concerned, only because of the indirect taxes, GST, because compensation cess has gone away, the overall buoyancy ratio appears to be on the lower side. But if you look at the direct tax buoyancy rate, it's 1.1 or 1.14 times, which is in line with long-term average. So we are realistic, neither extremely conservative nor overly optimistic.
Okay, well balanced, like the budget. Chief Economic Advisor Anantha Nageshwaran, many thanks for joining us here on the CNBC TV 18 Budget Verdict, for highlighting for us why this budget will make a dent as far as India's aspiration to move up the value chain across many sectors. We will take a break, ladies and gentlemen, but don't go anywhere. We've got the Defense Secretary in conversation with my colleague Parikshit Luthra coming up. Remember, 21% higher allocation for the defense sector. It has been the sector in focus for Budget 2026. That coming up for you after this very short break.
For the labor-intensive textile sector, I propose an integrated program with 5 subparts. One, the National Fiber Scheme for self-reliance in natural fibers. And fibers and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3, the National Handloom and Handicraft Program to integrate and strengthen existing and ensure targeted support for weavers and artisans. Tech Eco Initiative to promote globally competitive and sustainable textiles.
All right, welcome to our Budget Verdict 2026. It's time now for the conversation that all of you have been waiting for. The defense capex, how Budget 2026 paves the way for Atmanirbharta and solid self-reliance in the defense sector, with an eye on more local defense manufacturing and greater exports. And who better to talk about it all than the Secretary of Defense, Mr. R.K. Singh. Sir, thank you so much for being with us. So, yes, the defense capex has got an all-time high allocation, a 21% increase overall, 24% specifically for defense modernization. Could you give our audience a sense as to what will be the sectors or focus areas when it comes to utilizing this capex?
Well, Parikshit, first of all, thank you for having me here. This is the third time running that I'm coming to this program. The first time was when I was in DPIIT, the last two, of course, as a Defense Secretary. You are right, I mean, we've asked for a increase in our capex budget in particular by about 20%, and the Finance Ministry, because of the better utilization that we were able to show over the last 2 years, because of the fact that we did record number of contract signings in the last 2 years, we were able to prevail upon them also in the context of the prevailing geopolitical flux that you see around us, including in our neighborhood. They were good enough to concede to our request, and they've given us a 21% increase in our overall capex budget and a 24% increase in the modernization budget. Now, where that will go is a matter of detailing. We have to work with the services, but there's a lot of stuff that is already in the pipeline in terms of committed liabilities, the things we signed up in the last few years, like the Rafale Marine, the Predator drones. All of those will start coming over the next 2 to 3 years, and various milestone payments will be made. But there will be some fairly large, big-ticket items in areas like drones and counter-drones, in terms of ensuring that our depleting fighter fleet strength is adequately replenished. All of it with the intention that we leverage our buying power to ensure that the bulk of what we procure also gets made in India.
Right. So there was a major allocation. In fact, the largest allocation, around 64,000 crores, was for defense aircraft and aero engines. Could you give us a sense what's in the pipeline?
Well, I mean, it's not a secret that we are working out modalities for doing a co-development of a jet engine with an international engine house. That process is on. Since it'll go to the highest levels in government, I can't give you a sort of timeline of when it will happen, but it's it's going to happen. We also have significant proposals for increasing the strength of our underwater fleet for our the submarine fleet for the Navy, as well as medium role fighter aircraft for the Indian Air Force. The timelines, the milestones, etc., I'm not going to tell you because that is really preempting the decisions that are to be taken at higher levels than mine. But yes, all of those are happening, and of course we are also going through with some emergency procurements that we started last year, but for which the payments will become due this year. So with that combination of procurements, we expect to ensure that this enhanced budgetary outlay is fully utilized during the course of the next financial year.
Right. When you speak about aero engines, are we talking about the deal with Safran?
That's right, yes.
And by when do you expect this to be announced? And
I told you that I can't give you timelines, but I can tell you that we are moving the proposal, and hopefully get clear, but I can't preempt the decision at the highest levels in government.
All right. There has been a lot of reportage on how the Defense Procurement Board has cleared the deal for 114 Rafale fighter jets. This was a proposal from the Indian Air Force. Could you give us a sense where this is right now?
So, I'll give you a theoretical answer that the process involves the DPB, then the DAC, and then if it is above 3,000 crores, it goes to the highest level in government, which is the cabinet. So the first step has been done, as you correctly mentioned. The next two steps will take place over the next few months. But again, I'm not going to give you specific timelines. That's not going to be the headline for you, because again, I don't want to preempt the decision making of levels in government that are higher than me alone.
Right. And of course, everyone in the audience possibly knows that Secretary of Defense also had chaired a committee which prepared a report on how to plug the gaps in the preparedness of the Air Force. I'd also like to ask you, sir, that when it comes to fifth generation fighter jets and AMCA, let me begin by asking about the AMCA program. There have bids which have come in from different bidders, including an HAL-led consortium. Could you give us a sense of how that program is moving and when we could possibly have some clarity?
Yes, sure. But before that, let me talk about the committee and the gaps as far as the Air Force are concerned. I think there were 3-4 major gaps. One was, of course, the overall strength and the numbers even of the 4.5 generation fighter aircraft, given the delays with the LCA. Other one was the absence of adequate numbers of refuelers and AWACS aircraft. Now, for all of these three, the procurement cycle is well underway. For the refuelers, we are down to the last stage of negotiating costs. For the AWACS, again, the similar thing. We are well underway in terms of finalizing those procurements. And finally, MRFA, we just spoke about. Regarding the other issue that you mentioned about the AMCA, we were pleasantly surprised by the very robust private sector response to that tender. I think 7 consortia of very credible private sector companies bid for it. We've done the initial, the pre-qualification. I think there are 3 remaining, and that will go to the Raksha Mantri soon. And thereafter, you can expect the RFP to be issued to all 3 of these companies for giving their cost bids for production of 5 prototypes of this AMCA aircraft. So I would say that we should get this finalized in about 3 months' time, hopefully.
And then the contract would be awarded.
That's right, yes. Then it will go to the L1 bidder among those 3.
And it's a 10-year roadmap for the first prototypes?
No, the first prototypes is only about 3 to 5 years, about 3 to 4 years. But the production, of course, will take about 10 years, yes.
Right. I think the audience would love to know that what were the lessons from Operation Sindoor which you have tried to bring into the union budget from the point of view of defense capex?
I think it brought home to us in sort of slightly closer terms as compared to sort of, say, watching the war in Ukraine, that what are the sort of evolving nature of warfare, the requirement for more of standoff precision weapons, of air power, of the use of drones and counter-drone systems. And as a result, we've obviously had to combine some immediate buys through our emergency procurement, which we ask the services to do immediately. And thereafter, in the course of the next few months, you will see a lot of fast-track buys of other areas where capability enhancement was required.
Right. Also to ask you about emergency procurements, you have mentioned that some of this allocation will go towards emergency procurements, but what can the private sector, the public sector and the defense industry expect? What will be the focus of your emergency procurements in terms of arms, ammunition in the coming months?
So, Parikshit, actually the private sector already knows, because those contracts have already been signed. The 15% of our last year's budget, which was earmarked for emergency procurement, we had given the services a 6-month period to sign the contracts. Those contracts have all been signed already. So I would imagine the players who got those orders are already in the know and are working hard on getting these. Both the OEMs and the component manufacturers must be already at it in terms, because the timeline is very strict there, that within 1 year, the delivery has to take place. So, that is not really an issue. The private sector is fully aware, and the contracts are already signed the last of them were signed by January 15th, about 15-20 days back.
Okay, now when it comes to the total defense expenditure as a percentage of GDP, now this budget, this defense budget takes it to about 2%. We've been hearing experts across the spectrum who say that it's possibly time for India to have a defense spending to the tune of 2.5% to 3%. What is your aspiration? You've made recommendations to the Finance Commission. Ideally, where should we be and by when do you want to reach?
So for the current year, I requested for a 20% increase in the capex budget, which of course we have got. In fact, we've got a bit more. Before the Finance Commission, if my memory is right, I think I asked for a CAGR of about 19%, so that over a 5-year period, we end up with close to 2.5% of the GDP. That was my aspiration. The government will take a call on that. But let me remind you that because we are growing at about nominal terms at about 10% in our GDP every year, we have a bit of fiscal headroom to ensure that at least 10% growth rate we can certainly give to the defense forces. I'm aspiring for a bit more, closer to, as I said, about 15 to 20%, primarily to ensure that this declining share of defense expenditure in our GDP, which has been reversed by this budget, gets further sort of enhanced over time to about 2.5%, as you mentioned.
Right. So that should happen in the next 2 to 3 years, sir?
5 years. 5 years is what I was mentioning.
All right. I would like to ask you about certain big picture items in terms of total defense production for FY26, total exports. What are certain targets or estimates you have in mind currently?
I think 26-27, we are looking at taking our exports from about 25,000 crores to at least 30,000 crores. And for the entire value of domestic production to about 2,25,000 crores from around 1,52,000 crores in the current financial year. So yeah, and that is broadly the fairly large jumps in both is what we envisage, and I wouldn't be surprised if we overshoot these figures.
Right. You've outlined certain priorities in terms of getting unmanned aerial vehicles, combat drones as well, and those were some of the lessons from Operation Sindoor. Apart from aircraft, apart from aero engines, what's going to be the big modernization theme, and how are you going to drive the indigenization story? Are we going to see more positive indigenization lists?
Well, one way we drive it is by simply fixing a normative figure that 75% of our capex will be spent in Indian rupees, which is within the country. We've achieved that last year. In fact, I think we achieved close to 87% domestic expenditure. The current year, we'll hopefully be able to overachieve that again. In terms of where the money will go, I mean, the Honorable Prime Minister announced a major new mission, which is basically a combination of air defense and offense, called the Sudarshan Chakra mission. So you can expect to start seeing some of those contours of that mission in the future. That will be fairly expensive. Other countries are trying something similar, the Israelis, the Americans. So we'll be working on that, making that mission into reality by building some of the building blocks that are already available, and then adding various other additional layers on top of that. So that combined with, we have fairly large procurement programs for combat UAVs. The RFP is already out, and we've had a very robust response again from some 24 odd firms, which is quite remarkable. I'm sure all of them are not that serious, but hopefully at least 7, 8 of them are really serious players. So yeah, then we have these Predator drones that are going to come in the next 2 years or so. So yeah, all of that will, will ensure that we spend the money that has been allocated for us. We signed contracts of 2,10,000 crores 2,09,000 crores last year, which was a record, an all-time record. And this year, in the current financial year, up to December, we've already done about 2,10,000 crores. So we'll certainly go beyond 2.5 lakh crores. So yeah, I mean, things are moving, and we want to make the defense industry hum in this country.
Right. We're negotiating a trade deal with the United States, but at the same time, other aspects of the relationship, such as renewing the trade deal, that has happened and that has remained on track. But how have the trade volatilities with the United States impacted our defense choices vis-a-vis our traditional partners, such as Russia for that matter? And how has that really changed our Atmanirbharta strategy?
So the trade vicissitudes are a kind of a validation of Honorable Prime Minister's vision that of Atmanirbharta, that we should secure our supply chains much better, and which is why I mentioned that 75% figure and all the rest of it. But if you're saying that whether the trade talks have had a adverse spillover effect on our defense relationship with the US, I would say no. On the contrary, we've continued to have a very stable, very strong relationship with them in terms of exercises, in terms of signing this new 10-year defense cooperation framework, and even some of those procurement elements which you will get to know in due course of time, where we are continuing to sort of engage with them, and you will see some of those contracts getting signed as well. So it's not I don't think there's any major blowback as far as the defense partnership with US is concerned in terms of a spillover from the trade talks that are ongoing.
Right. About the DAP review, this has been on for some time. Could you give us a sense when the defense acquisition procedure, the revised procedure, will be put out and effective?
So I want to emphasize that even within the existing DAP, we've been sort of trying to ensure that, I mentioned the record contracts that we signed, that we move faster and get things done more quickly, irrespective of the procedure. But there are some elements of that old DAP handbook which require revision, particularly given the lessons learned in terms of low cost, the need to sort of ensure that the technology cycle, which is very short, doesn't create a situation where your procurement cycle is done in such a way that the product is sort of obsolescent by the time you buy it. So that process, the DAP review is in its final stages. We intend to put it out in the public domain in about a week's time. And thereafter, this is the final round of public consultations. After that, we'll finalize it, hopefully before the end of this financial year.
Defense Secretary, in terms of the big reform push, 2025 was a year of reforms. How would you describe priorities in 2026? And what would be your expectation from the industry as to what the country needs right now?
We call it the year of reforms, but the reform agenda is not changed. As I mentioned, the DAP review will take place, and that will be a fairly, major, game-changing kind of a reform. Ultimately, your procurement, because government is a single buyer, ultimately it is the government which can set the tone for the industry. And the intent is to ensure that the public and the private sector are actually given a level playing field. Both can sort of work on merits, that DRDO technologies are leveraged equally by the private sector through the development cum production partnerships that have now started seeing results in terms of large size contracts being awarded. So this entire combination of reforms is intended to make sure that we end up with a technologically advanced and diversified industrial base in this country, a hybrid production pipeline of both public and private sector.
Two quick questions and wrapping, sir. Mazgaon Dock Limited and Thyssen Group were identified to build 6 advanced submarines as part of the P-75I program. When is that likely to possibly see the light?
So you keep trying to sort of get timelines out of me, which I can't give you because I can't preempt decision making at levels above mine, but it is, we are working on the cost negotiations right now. So after that, in due course, it will happen.
Right. And my final question to you would be, we have seen tensions with Pakistan in 2025, and Operation Sindoor continues to be a lesson for India in terms of preparing itself for future warfare. How do you see our preparedness on both our borders, be it Pakistan, be it China? How are we preparing ourselves for the future?
Well, the way to prepare is to create enough deterrent capacity, hopefully asymmetry against a much smaller neighbor whose GDP is 1/10 of yours, and sufficient deterrent capacity against adversary whose GDP is about 4 times yours. So both those, that requires, as I mentioned earlier, enough capex to support a large, growing, diverse, agile defense industrial base comprising a robust public and a robust private sector, and that is what we are really working on.
All right, Secretary of Defense, thank you so much for joining us here at our budget verdict, giving us a clear indication of where you want to take the defense industry and India's priorities as well. Thank you.
Thank you.